Hello and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's video, we're going to be analyzing the crude oil markets as well as the gold price chart. The date today is the 21st of November, which means it's a Sunday. We are on the cusp of a brand new trading week, so very exciting times ahead. And of course, they will represent fantastic money-making opportunities. Now, going into the end of last week, we saw a lot of volatility, both on the crude oil and the gold markets. And today I'm just going to explain where my thought process is. And also we're going to then head over to the gold markets where I'm currently making a significant amount of profit. I did post this signal over on my streaming service. So if you would like to go and check that signal out, head over to my website, dailymarketmovements.com. I've left the website link in the description of this video. And if you scroll down to our video category, I posted a video here where I explained my new strategy with regards to gold and crude oil, and of course I share with you my gold signal. So go and check that out. Just want to also say a massive thank you to everyone who joined the streaming service over the weekend. I think we've had a large number. I think it was 57 or 60 of you join us over the past 24 to 48 hours. So thank you very much and welcome. But let's get cracking here. So crude oil markets. Horrible day on Friday as we went into the weekend. We fell all the way from $79 down to $75. This represented a 4.82% fall. Now, I was calling for a pullback here in the crude oil markets when we were trading up at $75. We completed this full extension here on the fib chart, and I did call for a price movement down towards $80. Then when we hit $80 a barrel, I then sent out a buy signal. This video you can find over in my streaming service. I posted a video. It was a gold signal somewhere in one of these videos where I had a stop loss just below the 50-day EMA with my take profit back up $85. And unfortunately, that signal lost. We went and triggered the stop loss, and I had lots of my clients contact me saying, Matt, should I keep the position open? And I said, no, close it. And this is exactly why. You know, we've seen that further breakdown. We've just broken below the 0.61% fib retracement level, and we've got that daily close below it as well. So this to me tells me we're heading lower. I think we could be heading as low as $73, but I do not mind, okay? It's not great that we lost that signal this week, but as long as crude oil can continue to trade lower, this to me creates more and more value. And if we can get as low as the 200-day EMA, which I know is a big ask, that would be a fantastic money-making opportunity. And before I did open that buy signal down at $80 a barrel, it was a few episodes ago, maybe 2 or 3 weeks prior to this fall, I did say that eventually we will see that fall down towards the 50-day EMA, and we could even see a fall down towards the 200-day EMA. I explained that, you know, we've had this fantastic rally all the way from $35 up towards $85 in such a short period of time. In fact, the energy sector has been one of the best performing sectors in 2021. We've rallied a significant 143% here in the crude oil markets, and very rarely did we go and test that 200-day EMA. In fact, rarely did we go and test a 50-day EMA in the past two to 3 months. But I did warn all the retail traders out there that I did anticipate this move, and that was because the RSI was becoming extremely overbought. We were trading as high as 76, and sure enough, we've now broken below the 50-day EMA. We've had a clear daily close below it. We've had a clear daily close below the 0.61% fib level. So this tells me we are going to minimum 73, maybe 72, $2.50 a barrel. But I personally think that this could trigger a sharp move down towards $69. And why has this happened? Well, that's because we've had some hedge funds and some large banks come out and forecast more bearish prices here for the crude oil markets. And as they believe that the inventory numbers, so on Wednesday you have the oil inventory numbers that always come out, and it gives us an insight about how much storage of crude oil is currently being held in the US, and they anticipate these numbers to rise rather significantly because right now we have energy prices shooting through the roof, and there's a lot of pressure on Joe Biden to announce that, to ask for the oil companies in the US to start, pumping more oil so that it helps combat these rising energy prices. So there's always that fear looming in the market. If Joe Biden was to come out this week and say, yes, we are going to be pumping out more crude oil, well then, of course, supply and demand economics 101, that will cause the crude oil prices to fall. But I think medium to longer term, they rise. I think that we do go to $100 a barrel, and I just see this as a fantastic money-making opportunity. I would not be buying into this now. As the old saying goes, don't try and catch a falling knife going into the weekend. So that's why no positions were opened, and I want to see how this plays out going into the new week. So I'm going to be sitting on the sideline and being patient. Of course, when I do decide to take action, I'll be posting it over in our Signal group over on Telegram, and of course I will post a video over on the streaming service. So if you would like to catch that signal, then please do head over to that streaming service website, www.dailymarketmovements.com, and sign up for a very small fee of $19 and get involved on our next signal. But moving over to the gold markets. Now, gold is working in our favor. I opened a sell position right at the top here around 1870, and we're now trading in profit. If you would like to know where exactly I'm targeting, so to understand my exit plan with regard to this short position I have in gold, then again, you can head over to the stream website. I think I showed you at the start of this video where I posted that video where I explain my gold strategy and my exit plan here. But I do anticipate gold to continue to fall this week. On Friday, we broke down rather significantly, trading down roughly 1.5%, and we currently find ourselves trading at 1845. Now, we've been trading in this downtrend going all the way back to the beginning of August 2020. It's been very, very toxic here for the gold bulls. We've just continued to fall lower, lower and lower. And then, of course, we had that long anticipated breakout here where things really started to look exciting for the gold markets. But unfortunately, the RSI was towards the expensive side. And since then, we have decided to break down. Now, two things could occur here. We could just see a simple back test to this next fib level, which is at 0.38%. And then we could see a return towards the 0.5%. And if we can break up there, then I think we go looking towards 1920. But if that was not to occur, we could just see a simple false breakout here, which would be very harsh for the gold bulls who have been so patient for the past 12 months, or probably a bit more, 14, 15 months for them just to see a false breakout. Okay, so that would not be very nice. But one thing I do recognize here on the gold markets, which is extremely bullish medium to long term, is we've had that bullish crossover. Now, for those who do not understand what that is, basically we've had the 50-day EMA, which is this red line, pierce above the 200-day EMA, causing a bullish crossover. And what does this mean? Well, this typically means medium to longer term, this is a bullish indication. We saw it here, for example, where the 50-day EMA pierced below the 200, and that triggered a massive move towards the downside. Then we saw it back. It happened again, and we continue to trade higher. But a more significant version of that would be, look back here when this happened. We had a bullish crossover with a 50-day EMA piercing above the 200. This was back in January 2019, and that triggered a multi-year bull run for the gold markets. And in fact, that's when we went on and achieved that all-time high. So if you would have bought gold down here, down at 12,077, and sold here where gold had that bearish crossover with the 50-day EMA piercing below the 200, well, look, you would have made a significant amount of profit. And just from a perspective, just from a percentage perspective, you'd have made around 32, arguably maybe 40% on your gold position, which is fantastic. So that is a very bullish signal here for the gold markets. But I do continue to hold my short position. As I mentioned, I've explained in depth my exit strategy here with my gold short position, but I'm making some fantastic money here, and I expect it to continue. So as we are on the cusp of a brand new trading week, I thought I'd just jump onto YouTube and just share with you my opinion as we go into the new week on both the gold and the crude oil markets. And I'm going to leave it there. But as I mentioned at the start of this video, if you would like to join my streaming service, we charge a very small fee of $19.99. It's pocket change. And with that, you can see all my videos where I analyze the commodity markets. I have educational content down here at the bottom. You can see my stock and US equities signals. I have Indices Watch, where I cover the NASDAQ and the S&P 500, and of course crypto, where I cover Bitcoin and XRP. But thank you very much for watching this video, and I hope to see you over on my streaming service in the foreseeable future. Thank you.